Good evening, guys. Good afternoon, guys. This is Analysis King. Welcome back to my channel. This is Analysis King. I want to say a big thank you to my subscribers, the ones who have actually subscribed to the channel. I love you guys. If you're actually new to the channel, if you're new to the channel, I want you to kindly subscribe to the channel. Kindly subscribe to the channel. If you actually found value, if you found value on the channel, kindly hit the notification button to know when I actually post a video. Kindly subscribe to the channel, like and comment on the videos. And to my current subscribers, I want to say a big thank you to you guys. Thank you for supporting the channel. I really appreciate you guys. Right, so let's get into the video. Right, I actually want to talk about structure. I want to talk about structure, market structure, right? That's basically what I actually want to talk about, right? So because most people really don't understand, most people really don't understand this thing called market structure. The market is extremely dynamic. The market is dynamic and it moves in structure, right? The market is dynamic and it moves in structure. You need to understand the market structure, how the structure moves, which structure you need to use to actually place a trade in the market, which structure you need to which structure you actually need to focus on to give you a very good directional bias in the market, right? So let's actually dive into the chart, right? Let's dive into the chart. The first thing we need to understand is that there are two types of structures in the market, right? The first thing we need to understand is that there are two types of structures in the market, right? We have the higher highs, and we have the uptrend, and we have the downtrend structure, right? Let me remove all this. Let me remove all this. Sorry, let me use a clean chart. All right. The first thing we need to understand is that we need to understand that there are two types of structures in the market, right? We have the upward structure and we have the downward structure, right? In the sense that we have the uptrend and we have the downtrend, right? Let me give an example to it. We know that we have an uptrend which comprises of a series of higher highs and higher lows in the market, right? And we also have a downtrend which comprises of a series of lower lows and lower highs in the market, right? This particular thing you see right here is the basic and the fundamental of the market, right? This is the basic and the fundamental. This is the most important information you have to get about the market. You need to understand the movement of the market. You need to understand the synergy of the market, how the market moves. It moves in structures, right? It moves in waves. The market moves in waves, right? Making higher highs and higher lows, right? Making lower highs and lower lows. And also the market also has a movement which we call a range, right? A range is where the market is not making a high, is not making a low, is just trading inside this box, right? This is basically what we call a range. These three information is actually what you need in the market to really understand the movement and the dynamics in the market, right? Now, that's the first information you need to understand. Now, the second information you need to get is which of the structure should I be following? Which of the structure should I be following, right? I've seen the common mistake I've actually seen is that a lot of people use the 1 hour chart, right? A lot of people use the 1 hour chart, and a lot of people don't understand that the 1 hour chart is a chart that is just meant to create liquidity, right? The 1 hour chart is just a chart meant to confuse you and to create liquidity. And that's why a lot of people get stopped out on the 1 hour chart. You are not supposed to be looking at the 1 hour chart for your analysis, right? Most of your analysis that you're supposed to be undergoing is you're supposed to be doing your analysis from your monthly to the weekly to the daily down to your 4 hour. Then your 1 hour should be your execution time frame, right? A 1 hour should be your execution time frame. Now, there are two types of structures that I've actually found out, that there are two types of structures in the market. We have the intermediate structures, right? The 1 hour time frame is what I use, or I call the intermediate structures, right? Now, I'm going to give you an example. Now, if you look at what gold is actually doing right now, we can actually see from the higher time frame, right? We can actually see from the higher time frame. Let's go to our daily. Let's go to our daily. Right. So let's go to our daily. Now we can actually see from the higher time frame that gold does not really have a direction. Right? Gold is actually trading in a range. But if you look very closely, right? If you look gold is actually trading in a range which we've actually established. But if you look very closely, right? Let's zoom out a bit. If you look very closely, you will see that gold is actually making a series of higher highs and higher lows, right? This is the high on the daily time frame. This is the first high. This is the initial high in May that has been broken. This is the second high. This was the first high. So we can actually see that originally, right, we can see that gold is actually trading in an uptrend, right? Gold is giving us a series of higher highs and higher lows in the market. This particular section, right, on the daily time frame, this particular intermediate section, this particular section on the daily time frame is what I call the major structure. Right, this is the major structure which you actually supposed to be focusing on, because you need to understand that there are major structures there are intermediate structures inside the major structures, right? Let me give you an instance. Right now, let's assume that this particular structure that you are looking at right now is the daily structure. Right, this is the daily structure. This is the daily structure. Now you can see that we are actually in an uptrend, right? From this drawing, you can see that in an uptrend. But if you look at the 1 hour, right? If you look at the 1 hour, you will actually see that we have intermediate structures inside this bigger structure, right? You will see that we have intermediate structures inside this bigger structure, right? Remember that we have the higher time frame structure already as established, right? But we also have the smaller structures inside these bigger structures, right? And these smaller structures are what I actually term as these smaller structures are actually what I term as liquidity structures, right? Because the market makers don't really focus on these smaller structures on the lower time frame, right? Because from your 1 hour down to your 5 minutes are lower time frames. The market makers don't look at the lower time frame. They don't look at the smaller structures. They look at the bigger structures, from the daily to the weekly to the monthly. They look at, because all those regions are actually places where they have created liquidity, where they have their orders set already. So all you are seeing from a day trading perspective, all you are seeing from your 1 hour, you are seeing all these little structures, and that's why a lot of people get stopped out a lot. This is the reason. This structure right here is the reason why a lot of people get stopped out a lot, because a lot of people don't have the higher time frame perspective in mind, right? You don't know that this particular 1 hour was actually created to trap traders, right? This 1 hour structure was actually created to trap traders. The first thing you need to understand the overall bias in the market, the overall structure. Now we have seen that the overall structure in this particular market is an uptrend, right? From the daily. Now we are using this particular schematic as the daily time frame. Now we have seen that it is the daily structure, right? Now, if you there are other kinds of structure that you will actually see that we are actually in a downtrend, right? We are actually in a downtrend in, let's say this is another daily structure, right? This is another daily structure that we have actually established that we are in a downtrend, right? We have established that we are in a downtrend in using this schematic, right? But if you go to your lower time frame, you will begin to see that you have a series of higher highs and higher lows being formed. Now, this particular higher highs and higher lows are actually are actually movements in the market that is coming in alignment with the higher time frame, with the higher time frame structure. This particular structure right here is your 1 hour structure, right? This is your 1 hour structure that is showing you a series of higher highs and higher lows and uptrend inside a downward movement on the daily time frame. Now, using this particular information right here, this is the information a lot of people use, right? A lot of people just stick to your 1 hour time frame and begin to trade, but they forget to they don't understand that there is a bigger perspective in the market. There is the weekly chart, there is the monthly chart, there is the daily chart. These are the charts that you actually frequently you need to be your eyes need to be focusing on, because these regions or this particular chart are actually the point where the big boys are, where the market makers are. Now you can actually see, let's go back to the chart. Let me clean all this. And let's use the chart as an example, right? Now, if you look very closely, this is the gold chart, right? This is the gold chart. Where do you think the big move starts from, right? The big moves actually, let me clean this. Let me clean all this, right? So, where do you think the big move started from, right? You can see now that this is actually an uptrend. Now, price actually created what? Created structure. Price created structure, gave us a higher high, retraced back down, came back into this demand region, right? Remember that on the higher time frame perspective, we have already established that we are in an uptrend, right? Now, on the smaller time frame, all you guys will be seeing is a sell, right? All you guys will be seeing is a sell, right? But you fail to understand that we have a bigger perspective that we are actually looking at. We have a bigger perspective, a bigger time frame that we are actually focusing on. That on our bigger time frame, we are actually in a buy in an uptrend, in a buy market. But what you actually see a selling opportunity, which is from this region right here. Now, what you see is a selling opportunity from this region right here. Like I've actually explained yesterday, let me remove this. Like I actually explained yesterday from my previous video that when structure has been cleared, right? When structure has been cleared from a sell side, now that sell supply region that was actually created will now be used as a point of liquidity, right? Because one, the trend has changed from a sell side to a buy side, and structure has been taken out, which we've actually seen around this region. Now structure has been taken out here. What you guys actually see on the lower time frame around this region. Now let's look at this region, right? Let's look at this region on our lower time frame. Now let me remove this. Let me remove all this. Let me remove this. So let's go to our 1 hour, or let's go to our 2 hour. Let's go to our 2 hour chart. Now let's scroll back a bit. Now this is basically what we see on our 2 hour chart, right? This is basically, or let's use a 1 hour chart, right? Okay, right. So this is basically what we see on our 1 hour chart. A lot of people would have taken this trade, but most people don't understand that we are not actually in a sell market, right? On the higher time frame perspective, we are not in a sell market. We are actually in a buy market. So the higher time frame perspective is what you need to always place in mind, right? Because we have seen that from a daily, we have broken structure. From the daily, structure has been taken out. Structure has been taken out for the continuation of the buy side, right? So this particular trade you see right here was just a retracement, right? Was just a retracement and a liquidity trade that was actually created to trap traders, right? A lot of people. Let's go to the 5 minutes. Right, or let's go to the 15 minutes. Let's go back to that. Let's go to that particular region on the 15 minutes. I hope I can see it. All right. Now look at all this, right? This particular, this is the region right here. Let me use the 30 minutes. Let me see. Right, the 30 minutes should be clear. All right, perfect. Now look at the 30 minutes, right? Now this particular region right here on the lower time frame, which we are in right now on the 30 minutes, it was actually a trading opportunity for some people, right? But you want to always be following the market makers. You want to be following their footstep, right? All they are looking for, or all they are doing as market makers from the higher time frame, which we've actually seen, is that they are actually buying this market. They are not interested in selling. So if they are selling this market, they actually sold it to create liquidity, right? They sold this market to create liquidity because they know that a lot of people like looking at the smaller time frame, i.e., the 30 minutes, the 1 hour, the 15 minutes, right? They know that a lot of people like looking at the lower time frame, the 30 minutes, the 1 hour, and the 15 minutes. So they intentionally create this liquidity point. They intentionally create these liquidity points, right? They intentionally create this sell and form a liquidity point, which is actually the initial high. The initial high, all these regions right here, all these regions right here, all these smaller highs you see right here are actually liquidity regions, right? All these regions right here are actually liquidity regions in the market where the market makers intentionally create, right? Intentionally create to trap traders to go with the original direction. So you always want to understand the original direction. What is the higher time frame direction, right? The higher time frame direction should always be the first scope in your mind, right? It should always be the first scope in your mind. The higher time frame direction for the gold was a buy. So I will not be looking at selling opportunities. All I want to be looking at are buying opportunities, because the selling opportunities are actually used as point of liquidity in the market. Now you can see that price came back. They came back into that daily demand region. They came back into the daily demand region, and look at how price has been going higher ever since. You can see how price has been going higher ever since, because this particular because this and the directional bias from the daily time frame is actually a buying opportunity, right? It's actually a buy trade, right? So all you want to be looking at, you want to be looking at the higher time frame structure, right? You want to be looking at the higher time frame structure, ignoring the lower time frame structure, because the lower time frame structure are actually traps in the market. All you want to be looking at is the higher time frame structure and the higher time frame zones. So once price comes back to your higher time frame zone, then you look for your trading opportunity, right? I hope you guys found value in this video. If you found value in this video, kindly subscribe to the channel, kindly give me a thumbs up, and also turn on your notification button to know when I release a video. And I will see you guys. And if you want to join my Telegram group, the link will be in the description below, and I will see you in the next video. Cheers and God bless.